All right, I want to say thank you first and foremost for watching this video. It truly means a lot to me that you're taking your time in learning about this. So today's topic, I'm actually going to talk about why IRAs love predictable monthly income. And as you know, most IRAs are tied to Wall Street's, the volatility of Wall Street, the stock market, the swings, the ups and downs. I mean, it's so unpredictable. But retirement shouldn't be a guessing game, in my opinion. It should feel like a paycheck. And today I'm going to actually be talking about why these IRAs love predictable monthly incomes with mortgage notes. So a little stat: 1/3 of IRA rollovers land in cash and it actually stays there. Vanguard estimates Americans lose $172 billion annually by not investing that money. Another stat: there's $17 trillion in IRA assets, and IRA holds 35% of all U.S. retirement wealth. So this is an ocean of retirement money, but most of it's tied to the Wall Street's, volatility, the downs. What if there's more of a predictable way of earning predictable income within your directed IRA or your IRA? Just real quick, I'm not a financial planner. I'm not a CPA. This video is for educational purposes only. This is what I'm doing in my business. I've been doing this since 2006. This is not investment, tax, or legal advice. Please consult a qualified professional for advice. So who am I? My name is Larry Hoffman. I'm the founder of LJH Investments. I've been investing in 2006. I started out rehabbing houses, and then I switched to mortgage notes because I got tired of the tenants, the toilets, and the trash outs. And if you want, I'll give you a whole, if you want to talk about that, I can talk to you about that too. It's a ball of wax on that one. But I primarily in mortgage notes. I also do not so much. I would say 95% of my mortgage notes. I do buy businesses as well, and I'm the host of the 5-minute-ish Fridays. These are just weekly calls I have every Friday at noon. They're live on YouTube, LinkedIn, and also TikTok. I cover various topics: real estate investing, mortgage note investing, self-directed IRAs. How to use money within your to fund your retirement account within your IRA. So, if you have any questions, at the end I'll give you my contact information so that way you can get in contact with me. And then I also help IRA owners create a predictable income with notes. So, what IRA owners really want is consistent income, not guesswork. No more hoping the market is up when bills are down. The whole volatility of the stock market, the swings, something negative happens in the news, and it just seems like everything tanks. And the volatility of the stock market is what really scares me. Monthly paychecks from their IRAs. It's like a salary, but from their retirement account. And then security backed by real estate assets, not paper promises, but property. So the case of predictable income, really just getting a predictable monthly cash flow, in my opinion, equals stability for you. Easy to budget retirement expenses, protects against the stock market volatility. Like I was saying, swings in the market. It's great. And so why mortgage notes in these IRAs? I think they personally fit in there really well. And notes produce steady stream of monthly payments. You get the principal and interest each month like clockwork. Payments backed by real estate. If the borrower defaults, the property stands behind the loan. So meaning if the borrower defaults and you're not able to work something out on that note, with the borrower, you can foreclose on that property, get that property back, and even have a larger payday on it. IRAs become the bank. You're collecting payments instead of paying them. So let me just reset on basically what notes are, mortgage notes. So a mortgage note is a borrower's promise to pay. It's an IOU behind the home loan. Really, there's two instruments. You have a promissory note, that's the IOU, and the mortgage is what secures for that promissory note on the house. So if the borrower stops paying, you can foreclose on the mortgage and take that back. So you, the investor, to the bank's shoes, you collect monthly payments to principal and interest. Once again, payments are secured by real estate. This is I love mortgage notes. Unlike a stock, it goes belly up. I have no recourse with the payment, or I'm sorry, with these mortgage notes. If the borrower stops paying, I have recourse. I can modify that loan. I can do a deed in lieu of, or I can just do a foreclosure and take the property back and get a larger payday on it. You can purchase, a lot of people don't realize this, but you can actually purchase these mortgages. You can, I tend to buy them from banks, hedge funds, other note investors. And there are also low-hanging fruit websites that you can actually go to and actually buy these notes as well. So here's a real-life example. Here's a $50,000 note that I purchased within my self IRA. I purchased it $35,000 from the seller. He was another note investor. The borrower's paying $400 a month. It's really a predictable stream of income, not dividends that fluctuate. This $400, the payments do not fluctuate. It's $400 a month, month in, month out. Now, unless the borrower stops paying, something happens, they have some type of life-changing event, those payments may stop, but that's you as the lender. You can work with them to modify that loan to see what exactly is going on. Did the life-changing event that they, instead of $400, maybe they can afford $300. And then that's where I do this all the time, where I modify the loans to help them. But there are circumstances where, unfortunately, they lost their job and they can't afford to make that payment. So that's where you have to either do a deed in lieu of, or you have to foreclose on that property to get that back. And my self-directed IRA collects the $4,800 a year. I wish it was a month. $4,800 a year. It's tax deferred. And my annualized yield on this one was 11%. And best of all, secured by real estate. The tax advantage: traditional IRAs equal tax deferred income. You pay taxes later when funds are withdrawn. A Roth IRA is tax-free income. Monthly payments compound without future tax drag. And then every month payments build wealth faster. And this is really nice because the income reinvested inside your IRA accelerates growth, compounding. And that's another story. So compared to Wall Street is unpredictable. It's just the ups and downs, the volatility of it. I choose to not in the stock market. Markets can drop 20% overnight. In March of 2020, when COVID lockdowns were announced, the Dow Jones dropped 2,000 points in a single day, resulting in a 10% loss in just 24 hours. And during the during the 2008 financial crisis, some portfolios lost 20 to 30% of their value in a matter of weeks. I mean, can you imagine that retirement lost 30% of its value in a couple weeks? That, to me, that is just mind-boggling. Notes in an IRA: it equals contractual monthly income. Payments are agreed upon in writing. No speculation, as I was saying with that other example. The $400 is locked in and month out. So some of the other things that with these IRAs, which I absolutely love, the self-directed IRAs, you're leaving a legacy and a peace of mind. You could pass a steady income to the heirs, to your stress of market crashes, and the monthly checks equal freedom, really stability. So with that, I don't know if you have and you want your IRA to produce monthly paychecks, please feel free to schedule a call with me. That is a link, a Calendly link, talkwithlarryhoffman.com. There you can schedule a 30-minute call, an hour call, or a 2-hour call with me. My goal is to help you to understand this. So if you have questions at all, please feel free to book a call with me. And with that, I wish you success within your IRA, and you're able to what you need to grow it to for retirement. And I just wish you success in life. And if you have any questions, please feel free to book a time with me. I'll see you.